Okay, so just as we closing out this section of denied supplies, the one part of denied supplies that usually pops out within exam scenarios or test scenarios is that of a motor vehicle, because a motor vehicle, as we know, in its nature, it is a denied supply unless where there's like exceptions that are applicable, because like obviously for someone that's like in the business of being a car dealer, he obviously not be uh, in the actual business of selling denied supplies. For him, that would actually be an exception because he's a vet vendor who actually sells motor vehicles, so that's his business. So for him, that's a taxable supply. Those motor vehicles basically equate to them being traded stock. So it's a fine line. So, but that is just unique for somebody who's obviously in the motor vehicle business. But in most instances where you as a normal person, a professional, you go out to buy a vehicle which is a motor car, you would not be able to claim back VAT. Even if you're a company, so long as you are not a motor car dealer, you're not in that business, you'd not be able to claim back input VAT. However, you'd obviously be able, you'd actually be paying VAT, because the basic premise is that you obviously have bought the actual motor vehicle from somebody who's actually in the motor vehicle industry. So as such, you would have obviously been a vet vendor, within him having to obviously meet the actual exceptions. So a motor vehicle, in most instances, it would be a denied supply. But one thing that you must pay particular attention to so far as a motor vehicle is that it's actually a denied supply relating to the acquisition portion of the actual motor vehicle. So the acquisition part would actually make the actual motor vehicle to actually be a denied supply. So acquisition part, be very careful of that. That would be the part that is actually denied supply. So rental as well is also part of that acquisition part, because rentals are taken to be part of the acquisition cost as well. So if you get a scenario where you get maybe a company that's either renting a particular vehicle from a motor car dealer, or that possibly maybe buying a particular vehicle from a motor car dealer, and the actual invoice of the motor vehicle, let's say it's the total invoice price is 200,000 for argument's sake. The acquisition portion of that amount is 190,000 rand, and maybe there's another portion that's like maybe 10,000 rands for the document handling fee, something that I actually came across in my studies. So that there was one similar example like that. And so there would be like a document handling fee that makes up part of the total cost price of that 200,000 being 10,000 rands, whereas the actual acquisition was 190,000 rands. So, and that can also come in a way where you also have a rental. Maybe the rental portion was actually, let's call it 20,000 rands, and there was also this document handling fee portion as well that was part of the total rental fee, which was maybe 2,000 rand. So the actual rental fee for the actual vehicle would have likely been 18,000 rand, exclusive of the 2,000 rands, which would have been for a document handling fee. So bear in mind that in both instances, the 190,000 rands where they actually purchased the motor vehicle, and the actual 18,000 rands where they actually rented the actual vehicle, those two costs are actually part of the denied supply portion so far as the actual motor vehicle. But the underlying part, which is basically relating to your document handling fee, and in both instances actually, that's not part of the acquisition cost, so that would make it a normal taxable supply. So be very mindful of that. So when you're dealing with a motor car, just be very mindful and sensible in knowing that the actual portion of the denied supply relates totally to your acquisition portion, and where other extras like maintenance and repairs and insurance, which is short term in that instance, if they creep in that instance, those costs in most cases would not be denied supplies. That usually follow the usual process of them having to be taxable supplies. So be very mindful of that, because those could be extras that you can actually tell to the actual examiner, or you can actually tell professionals or people that find themselves within these transactions. So they could likely be portions of the acquisition cost, which you can actually claim input VAT for if the total purchase price is not totally related to the actual acquisition. There could be other costs that are basically related to the actual instances that I've just basically elaborated on. So be mindful of that. So motor vehicle is one huge common instance that we come across in practice so far as denied supply. So be very mindful of that, and there will also be situations that we get into as well, relating likely to motor vehicle in the coming sessions. Alright, and thank you.